Welcome to Taking Stock. This is the show where we prepare you for the coming week. I'm Lata Venkatesh and with me is Sonia Shenoy. Well, it has been one scintillating week, you will have to say. We saw the Sensex and the Nifty move up 3% apiece. The mid-cap index did half as well, but 1.5% is still something we can take with both hands. As well, Nifty Junior was up 2%. So across the board, all indices actually ended up doing well, with much of the gains coming actually in the second half of the week, especially on Friday itself. So good going. We will have to see whether the markets have the nerve to build on this already elevated levels. Hi, Sonia.
Hi, Lata. Yes, in fact, across the board, whether it was autos, whether it was metals, you had a lot of cyclicals that moved. Good earnings as well coming in from the likes of Tata Motors, etc. So all in all, a healthy week. But let's get to guests on our show now to tell us the way forward. You are Bhatt of Dalton Capital Advisors joins in, and in a bit we'll get Siddharth Bhamre as well. Mr. Bhatt, thank you for joining us on the show. After 2 weeks of a downtick in the market, we saw a bit of a recovery this week. Are you getting a sense that the correction that we saw was merely a shallow one and we have resumed our uptrend?
Looks like that because basically we have seen some FII interest at least the second half of the week. Plus also the fact that even the global factors that were influencing the market for some time now, they also seem to be sort of settling down. Like say, for example, Gaza, there is a truce. The ISIS issue continues to be bothersome. But we have at least Gaza, there is a truce. Plus, even in Ukraine, there is today just now I think Putin made a statement that there won't be any bloodshed and all that. So even that I think seems to be getting sorted out. Plus, you have the US numbers are not bad at all. I mean, at least the GDP number, that is what people still revel on. The 4% GDP number last quarter is fantastic. So I think the outlook for FII flows are not bad. Plus domestically we've well past the quarterly results. We have less than 50 points away from the previous peak. And there is some incremental positive news even on the inflation front, the wholesale price index, except for food. Everything else seems to be under control. We have auto numbers which are doing, which seem to be doing fine. Imports are doing well. That means that there is a lot of economic activity happening. So I think things seem to be taking a turn for the better.
Okay, Mr. Bhatt, thank you for joining us. At least half the results were also a bit troublesome. Yeah. The banks clearly indicated that the trouble is by no means over. Some of them had big booby traps, so to speak, in terms of NPLs. Many of the capital goods companies, along with the King Larsen Toubro, showed us that the past at least is not good. One doesn't know when the future will brighten up. So, will the market be able to make this dash beyond 7,850, or for that will we have to wait for more clear signs of growth?
Well, I think more clear signs of growth required. I think 7,850 or 7,840 or whatever it was, that I think is probably within sight. But for it to really make a remarkable push beyond that, I think some more news flow needs to be there. At least something on the policy front, I think that will be required. We have a big speech coming, so therefore there may be something that can enthuse the market. And finally it is the FII flows that count. So if we get a couple of 1,000 crores or at least 1,000 crores a day for the next few days, I think that 7840 can be breached.
What will you pick? You've just gone past an earnings season. What will be the areas that you would pick as leaders for say the next couple of quarters?
Well, I think private sector banks continue to be the favorites. Plus, you have IT. IT seems to be doing well because rupee also has sort of stabilized at slightly depreciated levels. So therefore, that should be good for IT. I mean, these two seem to be the ones who have given a reasonably good account of themselves during the result season. Plus, the delta has to come from cyclicals. So one needs to be there, even though the results have not been all that good. But things like infrastructure, things like engineering, capital goods may be a bit too early, but autos, I mean, these are the ones I think one needs to concentrate on. And pharma has done very well, so I think that is another sector where one needs to be invested. I think one needs to be in these, but probably public sector banks is not the flavor of the season. There may be at least a couple of quarters you have to wait it out. And capital goods may be a bit too early.
So for the next 6 months, if you had to lay out a range for this market, what would the floor and the ceiling look like?
As of now, I think 7,850 on the top side and on the bottom somewhere near 7,500. I think that's where it should be. But I think with a positive bias, that 7,850 can be breached pretty soon.
Okay, we don't normally hear a cautious Mr. Bhatt say these things. So let me, rekindle your earlier, sense of caution. The consumer price inflation number was quite ugly at 8%. Yeah. Even the core inflation was higher. Although the wholesale price index did show some bit of softness, we know the Reserve Bank looks at the consumer price inflation. Actually, economists told me, and that on my show Ingenomics, that the cut, if at all there is one, is definitely 12 months down the line. I mean, they're looking at it in July. There was one economist who even thought that a hike may not be ruled out if, the food inflation pours into other inflation numbers in a bit. Will that spoil the scene? We have grown in the past even with high interest rates. So will that interest rate hike, if any, and absence of a cut spoil the earnings show for you?
No, I don't think earnings are so very dependent on a quarter% movement in interest rates. I do not belong to the camp which says that interest rates have to be hiked. Given the sort of pressure that corporate India is exercising on the government and and indirectly on the RBI, I don't think an interest rate hike would be there. It would probably, the interest rate cut would be delayed, status quo would be maintained. But even if that were to be the case, a 25 basis point movement doesn't really impact corporate balance sheets dramatically. And barring that, if you see the 10-year gilt, 25 basis point movement has been there for many times now, and even the last 1 week it has been there. So therefore, if in a free market, there is already a change. So therefore, it doesn't matter what signal the RBI gives. The other point is that quite a lot of these corporates finally will start talking of new projects. That is the turning point for the market. We still not heard that, but I think the moment you find that the old projects that have got stuck, they are they get back into the mainstream, then I think people will start talking of new projects, and that is when I think there will be a turnaround as far as the attitude towards the market is concerned. So therefore, that's why I'm saying that 78.40 is at risk of being breached on the upside.
I guess the courage of an Adani to buy a Udupi power plant signals that maybe some troubles are ending.
Absolutely.
For some
at least those who have the credibility to borrow. I think they are the ones who are really going to buy all these assets which are available, which have got clogged because of some problem or the other, and they are the ones who can turn it around. And I think that is what will signal a change in sentiment as far as the market is concerned.
This week, in the week gone by, MIDCAPS actually played a bit of a catch-up, but if you look at the last 1 or 2 months, there's been a significant underperformance by MIDCAPS. Would you buy into MIDCAPS now, or do you think that it's better to stay away given the volatility we've seen?
Well, from mid-February, if you see, that's when the market was at around 6,000. I think the mid-cap performance has been almost double that of the large cap ones. So therefore, they have had their place under the sun for the last 6 months. So therefore, there is certainly a case for some correction, when you have had a 40-50% movement. And I think that is what is happening. But those who are invested in the large cap stocks and reasonably good sectors, they have nothing to regret. I think that they have done very well. But mid-caps, in fact, I think it's very wrong to classify all these companies as mid-caps. I mean, they're good companies which are well managed and they are not well managed. So it doesn't matter what size they are. So I think those companies which have competitive advantage and which have reasonable financials and enlightened management, I think they will continue to do well whether they're large or small.
Okay. Well, finally, Mr. Bhatt, since you are a veteran of many global cycles of capital inflows and outflows, it is quite possible that in the next 6 months, Janet Yellen will actually signal some timetable for the rate hikes. And normally when such signals are given, FI outflows can start even before the actual rate hike. Do you think that outflow is massive, or is it already factored in by the May taper talk? And secondly, in spite of that outflow, can India shine and shine alone a star?
Well, I think if you really see, finally, irrespective of what interest rates are, there are flows into emerging markets, even when interest rates are much higher. I think in the US, there were flows into the emerging markets. And among the emerging market class, India's absolutely shines. So therefore, I don't think there should be too much of a problem as far as India is concerned. It may not be of the same order as what we saw in 2010 or something like that. But I think the sort of about $10-12 billion or $15 billion per annum should not be a problem. And anyway, there is so much of notice as far as interest rates. I mean, it's at least 12 months away. And so therefore, people are all well organized to face this. So therefore, I don't think there will be such a sudden change in sentiment, even if you were to say that I mean, she's gloriously vague in most of her statements, so she will continue to be that, I presume.
Okay, all right, Mr. Bhatt, we'll leave it at that. You have a great Independence Day. Thank you, and enjoy your weekend as well.
Thank you.
We'll get Siddharth Bhamre on the other side, but in the meantime, listen in to some market opinion that we got from our guest editor this week, Ramdev Agarwal.
More probably in last 4-5 months you are feeling like that. I mean, the stocks are flying off like big time. I mean, 50%, 100% appreciation in 1 month or 2 months is common, and you can see buzz for mid cap and even smaller cap. People are, earlier people didn't want to go into the smaller stocks. They wanted large stocks, and now actually the fancy is for the smaller stocks. So the risk appetite is increasing, which is what is starting off a bull market, where people come out from the shell and start trading a lot more, going into smaller stocks, riskier stocks, bad stocks. I think all those things are happening. Market will surprise us on the upside. And particularly after the good monsoon and subdued oil prices, and kind of reality, kind of dawning on the people that a great thing cannot be done in a short term. And generally, great things don't happen in short term. So this government is creating the stage for a much bigger bull run and much bigger things to come. But in the short run, whatever was done in last 12 months will kind of have a huge impact. So maybe you'll have a very moderate 6 months. There will be two sets of wealth traders. One, which are already creating wealth. So my sense is companies like same TCS, Infosys, your HDFC Bank, HDFC, Hero MotoCorp, Mahindra, I mean, you name it, all across. I mean, these companies, they're the backbone of, say, if you make about 4,50,000 crores kind of profit today. I mean, this bulk of these companies will make about 3,50,000 crores profit. How much profit will make? About 4,50,000 crores profit. Of this, 3,50,000 crores is made by all these big companies. So they're the backbone. So they will grow.